All right, here we are. Good afternoon, ladies and gentlemen. Good morning and good evening, because I know that people from all parts of the world are watching this stream. My name is Thomas, and for the next 30 to 40 minutes, I will be talking about markets and some fresh recent trading ideas and overall um, market stories. Anything related to markets, you can ask me. So anything related to trading, I will be very happy to answer as many and as many questions as I can, and as fully as in so much detail as I can. Right, so the new trading week has begun. We are in the middle of Monday, almost. Uh, Yeah, it's 4 p.m. my local time, so two-thirds of this trading day have elapsed. Now, what is going on in the markets today, and what will be moving markets this week? So we have some not really common, something that is not really common for Mondays, but well, why not? Can happen any time of the week or any day of the week. Yes. So here I am. Hello, Mr. Himanshu. How you doing? And yeah, well, hello and welcome to everyone who is joining or who has recently joined. So first of all, let us have a quick look at our economic calendar. So as I said, so let me change my time to GMT +3. This is my current time zone, and today at 10:30 p.m. we have Mr. Fed Chairman Powell speaks his speech, and definitely, as always, as during the past conferences or past FOMC conferences, he is going to be talking about. He will talk about. Well, I'm pretty sure he will be talking about inflation. So inflation, key interest rate, or Fed interest rate, and the overall economy. So these are inflation and interest rates are usually the most common things that are that interest everyone in the United States. And based on the comments of Mr. Powell, we are going to see either a quick drop of NASDAQ and S&P and Dow Jones, or their growth towards to new highs. So currently, I am shorting these indices. I'm currently shorting NASDAQ because, well, some technical idea, right? So it went from this correction that we had in the middle of April. We had 1, 2, 3, 4, like basically 5 days, not counting this Monday. So was it Monday? Was it Tuesday? I think it was Tuesday. Yeah, that was Tuesday. So this little doji like candlestick, which was supposed to be a sign of reversal, but given the situation on that day, it just basically stayed there for one day and then dropped. Well, what I wanted to say is that the market dropped by almost 7 or 8% in 1 week, in 5 days of trading, which is significant. And that is why we saw an imminent rebound, which then took place from 17,000 and all the way up to 17,900. And then there was a moment of uncertainty, because this basically, after this correction, we came close to this previous resistance level, which was defined here. Yes, like here. I think now you can see it more more clearly. So there was this when it started. It started on February 21st, and it lasted till almost 2 months. The market was trading here, and a lot of highlights were a lot of positions, a lot of long positions and short positions were accumulated in this range. Then we saw this breakout happen, and it dropped towards 17,000, and from there it rebounded back to this price again, to the lower border of this previous channel. Then we dropped downwards because many people thought, many investors thought that we would start crashing, and then boom, it's like almost how many, 1 2 3 4, not counting this one, 4 5 6 7 8 9, almost so 9 out of 10 trading days were green. This is, in my opinion, probably one of the longest consecutive growth periods. The previous one took place, a previous similar one took place in October or November last year, 2023, when we saw this pretty nice rise from 14,000, 14.2 thousand, and all the way to 1 2 3 4 5 6 7 8, so 8 9, like 10, so more or less 10 out of 12 green days, which is not very common, but markets can be trendy at times, and the idea is to catch them while they are trending. Now everything points to the fact now that the market is significantly overbought, despite the fact that we have managed to climb above the previous high. So there was this breakout that took place last, I think it was Thursday. Was it Thursday? Was Wednesday? Maybe it was Wednesday. So on the 15th of May, we pierced through this resistance level. We managed to stay above it. So 1 2 2 trading days closed above that level, and today on Monday we are still trading above previous high. But now I think the market needs to let off some steam, and right now everything, well, in my opinion, more facts are pointing to overall to the imminent cool down. So the market needs to cool down a little bit, needs to let off some steam, and then it will gain more traction for further growth maybe. But yeah, as I said, it needs to cool down, and we need to see some form of a correction. So probably, in my opinion, the target is here, so 18.3 thousand. So the market can drop all the way here. Right. So let me check our chat, please. Is my voice? What is my voice? I think, yeah, I think everything is visible, and I'm audible. And I speak loud enough. Hello, Spanish. Spanish, yes, we do conduct webinars in Spanish. Please go to our OLYMP TRADE Latin America channel. You can find it on YouTube by searching it, and there we conduct webinars in Spanish. And for everyone else, I would like to remind you that we do conduct webinars in all our main languages. In all our main languages, yes, that's it. Right, what else did I want to talk about before? So I have something interesting for you guys today, and I will be talking about our Crash STM, this family of STM indices. We have Boom Index, Boom STM 150, Boom STM 300. We also have Crash STM 150 and Crash STM 300. So today I want to be talking about these four indices, and in detail I will explain how they are formed, and basically how to build your trading strategy on these indices. That is thing number one. So the question here, your top 4 strategies. I think I've named them so many times already, but don't worry, I will tell them once again. So first of all, Excel, one of the best trading strategies for newbies, for beginners. Very easy to use. It only has basically one indicator, 2 lines cross, the momentum indicator, and based on, so it's impossible to not like learn this strategy. Very easy yet very efficient. Next is definitely my triple about strategy. I use divergence pattern a lot, or divergence patterns a lot, and I think right now if you look closely at the NASDAQ index, you're going to see that we have the so-called divergence, which has already formed. So this pattern has already formed on all three RSIs, which are parts of our trading strategy called triple rebound. And yeah, this is a quite productive trading strategy. And yeah, I always use triple rebound or the RSI indicators, one of my all-time favorite indicators, that's for sure. Right, what is next? What comes next? Let me see. Yes, it's Kind Martin. So Kind Martin, once again, very simple to use. It's a very simple to use strategy. So we only have basically the parabolic SAR indicator, and we have the MACD indicator, and you just need to sort of get two confirmations. So you get confirmation from layer 1. So layer 1 is the parabolic SAR, layer 2 is the MACD indicator. So and then yeah, you just combine these trading strategies, these signals, and that's how you get signal. And my fourth favorite strategy is of course Jack Tar. And Jack Tar is a great strategy because it is based on these three simple moving averages, and these three simple moving averages, they use the most common periods, or this parameter. So we call it periods, right? SMA 50, the 100 SMA, and the 200 SMA. These simple moving averages are used by most of experienced traders and by almost all hedge funds. So if you go to, for example, finviz.com or any other trading resource, you're going to see that you might not find any other indicators, but these two, especially the 50 SMA and the 200, sometimes 20 SMA as well. So 20, 50, 100, and 200. These are four most common periods for simple moving averages, and many people use them in their trading. Now, let me mention one more thing that I want to mention. Of course, it's Bitcoin and Ethereum. So they are at their tipping point, especially I think Bitcoin, because as you can see, we are on the verge of a final and serious breakout from this downwards channel. Well, will this happen? Of course, only like no one knows, right? So we cannot be sure, we cannot be 100% sure, because this 67.3, and if you pay if you pay attention, you're going to see how this chart, just any other asset, strongly reacts to the 50 SMA, and here the 50 SMA, such a beautiful pattern here, right? So we touched this on the 23rd of April. We touched the 50 SMA from bottom upwards. We couldn't break, so the price couldn't break above it. Then there was this doji looking candlestick, and we dropped 10,000 US dollars per coin, which is an equivalent of almost 15%. And then we managed to go up, but there was one attempt to break. There was the first attempt to break above this 50 SMA, and then on this huge candlestick, that was the what was that, CPI data last week. So Bitcoin price managed to break above, first of all, above 63.5 thousand, which was the previous major resistance level, and then above, yeah, this was, first of all, was this level 63, then 64. So all these levels, all these strong levels of resistance were pierced in one day on this huge volume. And yeah, currently we are trading here 67,000. Are we looking at the march, at the rally towards 100,000? Well, I mean, it's less than 50% growth, seriously, for Bitcoin, right? And as you guys remember, I guess like it's not I mean, like, it looks a lot in absolute figures, but if you look at it from the relative point of view, like relative percentage, like 67, half of it is like 33,000. That's exactly, we need to grow by 55% in order to achieve the so desired goal of 100,000. But course, of course, there are so many sellers who had bought Bitcoin many months, maybe years ago, and they are ready. Their sell orders are already ready. I think they have been placed near 100,000 long time ago. But we can see another craze, another rally towards 100,000. This might happen. Everything points now to this fact, and this can happen, I think, well, pretty soon. I mean, I don't know when, but given the shape of this chart, I mean, finally, what I call it was the wave of growth number one, or was it? It's kind of hard to tell. I think it's better to compare from here. 1, 2. So 1 first correction, second correction. So usually there is another third wave of growth, and only then we see a real correction, because I cannot really call this a significant downwards rebound or a significant correction, this range. But as you can see, since the beginning of March, since late February, we have been trading around all around this corridor between 60,000 and 70,000. All right, so this is that's it for Bitcoin. And our final friend here, well, I mean, so many news. Gold, right? So gold, wow, gold is trading above, so it was trying to renew, to break above the all-time high at 22,450. That is the current all-time high. I think it's slightly higher. Yeah, it's $20 higher than the previous high, which was shown on the 12th of April. And right now, yes, it's 2,450, the current ATH, the current all-time high for gold. And of course, silver is following closely. And I think what's happening right now is that silver now starts to grow with at an accelerated pace, at an accelerated rate. So as you can see, yes, we are already trading near $31 per troy ounce here with silver. And this is quite significant because last time we were trading so high just in July 2012, so 12 years ago. Amazing, right? So finally, a lot of interest, a lot of money has come into silver. Well, there is a fundamental explanation for this, because China, supposedly, there have been rumors circulating all around the place that China is buying a lot of gold, and China is selling their American assets like treasuries, and yeah, so treasuries, basically 30-year bonds, so bonds, notes, everything that they can, and they are buying gold and silver instead, precious metals. So not surprisingly, it's no surprise that gold and silver are rallying right now. All right, so let's go back to the main topic of our today's webinar. And so recently, our company, we have introduced 3 more assets to this family of STM. Guys, so please write in the comments. Do you want me to talk about these indices or not so much? Because I'm really interested to know whether you need to know how to trade these indices. I hope they get interest and you're interested in them. But so let me start off with these indices. So as I said, we have Crash STM 100, 300, 300, and boom 150, boom 300. Right. So let's start off with something simple, right? So boom, or no, something simple is Crash, right? It's easier for us to understand Crash, and we also understand why crashes are so important. So if we look back, I'll just give you one example here in NASDAQ. So in NASDAQ, on the NASDAQ index, on the NASDAQ composite index, crashes and booms, they do happen, they do take place. This event usually coincides with major news releases. I think, when was that? I think it was on the 16th. Where are you, Mr. Crash and Mr. Boom? Yes, this is it, right? Event like this. So for a long time, the market doesn't show any significant I don't know, like moves, interest, and then all of a sudden it jumps by more than 100 pips. So this is called basically a news event, or some macro statistics was published, and at that moment of time, immediately after, we see this boom, right? So it, in our terminology, it's called boom, right? Like it's booming, the market is booming, the market is surging. So this opportunity happens from time to time, and also there was a significant news release last week on Tuesday on the CPI. I think it was CPI data. No, it was something else. I think I don't remember which one was CPI. One was the first one was CPI, and then the other one I think was PMI. But it doesn't really matter so much, because what matters is this event. So we have Crash, and previously I showed you this boom. Now, how does this apply to our new indices? So this index, Crash STM 150, if you press here on the information sign, so what it reads here is the following text. So this composite index's behavior simulates stock market crashes. The average time between crashes is only 150 ticks, which is reflected in the instrument's name. Now, so let me translate this into simple English, simplified English, because English is not obviously my native language, but I'll try to explain in my own words what this means. The key word here is 150. The key number here is 150. First of all, what is a tick, right? Because it says 150 ticks. We need to understand what a tick is. So tick is basically any change in price that takes place on the market. So as you can see, this price is changing almost every second. And if you go to the quote history of this asset, you're going to find the following information. So 1550, 00 and milliseconds, 01, 02. So usually, with very few exceptions, we have one tick per second. So it means that this asset, it grows slowly, because as you can see, all green candlesticks are of the same size and obviously of the same color, which is green. And then at some random period of time, this crash happens. All right. So since we found out that there are 60 ticks, or 60 smallest price changes in one candlestick, this basically means the following thing, that usually you have 150 ticks is almost always 150 seconds, and it's around 2.5 candlesticks of green color. So what this means is that on average we should see a drop like this one, so this big red candlestick, almost after every three green candlesticks. So if everything was kind of the same and equal, we would see the following picture. We have 3 green candlesticks, like here, 1, 2, 3, and then we have a crash. and then 1, 2, 3, crash. But there is an element of randomness, and as the name suggests, or this number suggests here, that this doesn't mean that this is always the case, but it rather says that on average it's 150 ticks. So if we count these sequences of colors and candlesticks, we are going to notice a very interesting thing. So let's move here. So we have, let me just select a random example. So we have 1, 2, 3, so 4 green candlesticks and crash. So 4 candlesticks is around 240 ticks. And then we have 1, 2, 3, 4, 5, 6, 7 green candlesticks. So on average, it's approximately 420 ticks, and then a crash. Then we have 1, 2 candlesticks, which means 120 ticks and crash. Then there is almost no break between crashes. It means that there were only 30 ticks between crashes. Then we had 2 green candlesticks, which is probably around 120. Then we had 5 candlesticks, which is 300 ticks. Then we had around 60 ticks and a crash, 60 ticks and crash, 2 candlesticks and a crash. So as you can see, on average, this the number of green candlesticks between crashes is usually, like, I would say on average it's around 3. Sometimes it's 2, sometimes it's 5, sometimes even 1, sometimes 1, sometimes 2, 1. But it's more likely. All right, so let me go ahead and open my first trade here. So I press a down trade here, and look. So 1, 2, 3. 180 ticks have passed since this previous crash. So this means that a crash might come anytime soon. So let's see what's going to happen with it. Now, do you have any questions at this point? Because it's very important for me to understand whether you understand what I'm explaining here. I'm very eager to hear that. All right. So all right. No crash. So 1, 2, 3. So I've already started trading, right? I want to explain on this real life example. So 1, 2, 3, 4. So 240 ticks in a row of green color. So this is already almost twice the norm, twice the average. So a crash can happen any time soon. And another important observation here is that the more green candlesticks in a row you have, the higher the likelihood of a crash. So crash now can come at any moment of time. So it can appear at any moment of time. All right, it has not appeared, so I increase the amount by the so-called loss compensation system. And now we have 1, 2, 3, so 5 green candlesticks in a row, which is twice the normal length between crashes. So on average, I would say the chances of a crash, they increase. Now, there is a very interesting thing here. I can even increase in order, okay, well, I think it's too close now to, yeah, I think it's just, sorry about this, a little too close to the, oops. All right. There is a trick, right? You have to be quick. So I wasn't quick enough, and this 1 second caused me, I placed the trade exactly at the moment of crash. So unfortunately, this can sometimes happen, but I was trying, and I'm still trying to explain the logic. So as you can see, the likelihood of a reversal or a potential crash, it increases over time, especially if you have a big number of green candlesticks in a row. So what I was trying to do, I was trying to basically increase my, all right, now it works. Okay, so this is my stop loss. So you can actually place your stop loss, you can add money into your trade, and thus you increase your chances to actually holding on to this trade and waiting for this reversal and not having to actually re-enter a trade. And the main problem with re-entering a trade, like opening another trade, is that every time you have to pay a commission. And unfortunately, this commission is quite high due to the high multiplier, which here equals 500. So that is a little bit of a problem. So that's why, if possible, you can just increase your the size of your stop loss. So that is solution number one. Right. Now, following the same analogy with Crash 150. Now, what's the difference between 150 and 300? Well, the difference is that crashes, they once again they take place, but now the average number of ticks is equals 300, or in simple words, or maybe for easier visualization, it means that crashes happen usually after 5 candlesticks. So 300 ticks is exactly 5 1-minute candlesticks, and usually crashes happen after that. But of course, as I said, this is not always the rule. This is just the average number. So on average, this number equals 5 1-minute candlesticks, so 5 minutes. But in reality, yeah, for example, here, this is the perfect example. 1, 2, 3, 4. So 5 green candlesticks and then crash. 1, 2, 3, 4, 5, 6. 6 green candlesticks and crash. Then 1, 2, 2 green candlesticks and crash. No green candlesticks and crash. Then we have 1, 2, 3, 4, 5, 6, 7, 8, 9 candlesticks and crash. 2 and crash. So as you can see, on average, the simple arithmetic average equals 5. And once again, so if you have too many green candlesticks in a row, that is a sign of a possible reversal. And yeah, that's pretty much the moment of time when you need to start thinking, start considering opening a trade in the opposite direction, expecting a crash, or knowing the principle that after the usual number of ticks between crashes equals 300, you can do the opposite thing. And for example, here after a crash, after a fresh recent crash, you can open a trade in the upwards direction and basically try and catch something like this wave of growth. For example, here we have 9 green candlesticks, we have 10 green candlesticks. Okay, so that was 2 crashes in a row. Let's try once again. So because usually it doesn't it works in the opposite way. So we have one crash, but sometimes there can be 1, 2, 3, 4. It's like 4 crashes in a row, 2 crashes in a row, 2 crashes in a row. So one. So it's not always the case, but it's all about probability. And on average, it equals 300 ticks between 2 crashes. All right. So do you guys have any questions? All right, let's do once again. So 1, 2, 3. So 3 crashes. How many more crashes can there be in a row? So each time, so we are basically playing with probability. Like we never know how many how many green candlesticks or how many red candlesticks will follow, but we can predict, we can see, we can try. All right, so 1, 2, 3. So it's very likely, it is very likely that now we will see at least 3, 4, 5 green candlesticks. So that's the logic behind this instrument. Now, I haven't yet talked about trading strategies which can be used in this in trading while trading this asset. That's maybe another maybe a topic for another webinar. But at the same time, all right, wow, something. It's like sometimes whenever I try to demonstrate something during the webinar, we have the longest sequence of probably. It's like when I try to demonstrate something, 1, 2, 3, 4. So 4. How many more can there be? All right, let's apply the martingale principle to this candles to this asset. So 1, 2, 3, 4. So now we have had 4 crashes in a row, which means that the likelihood of a next crash is so minuscule, yet it is there and it exists, but each time it decreases. Slowly decreases. And based on this, you can actually build your trading strategy. Now, I think I will not really talk about any trading strategies or how one can use indicators in analyzing this chart. But what I'd like to mention is basically, or one piece of advice that I would like to give you is to just study this instrument, maybe use $1 per trade and just look how this asset works and how it basically moves, how many candlesticks of each color there are, so the number of ticks, and then you can find these outliers. So in fact, you don't need to count like 1, 2, 3, 4, 5. You just look at the time here, timestamp, so 10:47, 11:10. So that's approximately 23 or 24 green candlesticks in a row, and that is an absolute outlier because it exceeds the average number of ticks between crashes of so 5 minutes. So it exceeds this by 5 times, so 5-fold. But usually you have more or less stable phases like this one, this one, this one. And also if we go back to 150, STM 150, maybe this asset is even more interesting for I would say trendy trading, right? Because we can, oh yeah, look, now I'm lucky. I was a little bit unlucky with my previous trades. Now I'm lucky and I closed my trade. So cashing in with profits. So that's yeah, that's the idea of this asset, how this works. Do you guys have any questions about this asset or the principle of work? Because today I didn't really want to explain so much. I didn't want to talk so much about as I said, trading strategies. I just wanted to give you some brief intro to this asset to explain how this asset works. That was my goal actually. And also do not forget to use trading stop loss because it's a great instrument. I mean, I'm not saying that you need to use it all the time, but more or less from time to time do use it. All right, closing my trades with profits. So I made some profits, had some losses. but you need to look at everything in the perspective of not just a few minutes of trading, but in the perspective of hours, weeks, days, weeks, and even months. All right, so gold, my trade on gold, the one that I opened, when did I open my trades? Right, on January, right? See, the biggest trades, the biggest profits are made on long term. Very few traders actually make very significant number of significant amounts of profits with 1 minute trades, with 15-second trades, and similar short-term periods. The biggest money is made in long term, and this is a great example, this trade here. Now, the Euro USD, yes, also I opened this trade. I think it's time to close this trade. I'm actually considering closing this trade because I've been holding this position almost a month now, almost a month. I opened this trade on the 23rd of April, and I think the time has come to take profits because we have come close to a very strong resistance level. I think it looks, everything resembles like this very strong resistance level. So maybe the time has come to close this trade and take some profits. It's always a great idea to actually take profit because sometimes we enjoy a lot of virtual profits, a lot of unrealized P&L, and we just don't close those trades. Right. Just one final piece of information here. This week, Nvidia will be posting their earnings report. I think it is due on, well, I mean, even though earnings season is kind of over, but no, it's not over. It continues, but just the companies that post their earnings report, they aren't the most interesting, the biggest companies, but yet sometimes, where is that? Come on, Zoom technology, but not other Zoom technologies. Where is Nvidia? I think I read the news about Nvidia today. Yeah, Nvidia is due to post their earnings release this week. So pay attention to it because it's going to be a very interesting company to watch and a very significant earnings report that will definitely shake the market. All right. Yes, and it's on Wednesday after market close. So we will see the result of this earnings report on Thursday early morning. All right, my dear friends, this is it. Have a wonderful trading week. I hope that next week we will continue on Monday with our STM indices and maybe some other indices, some other products, some other assets to trade. Which website do you use to know economic indicators? Investing.com, probably the best choice. You don't really need anything else, I think, because everything is there and you don't really need any like 10 or 20 other resources. Investing has probably enough market data. Everything you need is there. All right. So my dear traders, as I said, have a wonderful week. I will see you next week, and don't forget that we do trading webinars in Spanish, Hindi, Arabic, Portuguese, Thai, Vietnamese. What else? Maybe I forgot something, and of course in English on this channel every Wednesday and Friday. So stay tuned. Good luck with your trades, and I will see you soon. Bye bye. Have a wonderful trading week.